Go ahead and jump in and get started, at least on introductions. I'm Paul Sponcia. I am the CEO of the IT company. I think on my screen I look a little darker because of my camera, so I apologize for that, but I'm happy to host this event today. Again, CEO of the IT company. We provide outsourced IT services to small and medium businesses, primarily in the Knoxville market, 25 to 50 mile radius. Had the idea to do this. We've been involved in the PPP process and thought, man, a lot of people are asking questions and I've got a couple of resources and friends. And so that's who I've brought to the table. So I'm going to start with Adam Slack, let him introduce himself, and then Chris follow on.
Hey everybody, I'm Adam Slack. I'm the president of Two Roads. We are a cloud-based accounting firm. We outsource accounting departments for businesses, large to small, and we've helped over 100 clients get the PPP. So we've gone through quite a few reps at this. So yeah, interested to hang out with you all today and chat about it.
Yeah, I'm Chris Trump. I'm an attorney at Egerton, McAfee, Armistead, and Davis. We are a mid-sized law firm in the area that represents mostly closely held businesses, though we do serve as local counsel for some larger. I personally represent a lot of borrowers and lenders in connection with commercial lending transactions, and so I've been asked to advise quite a bit on the Paycheck Protection Program loans, both advising lenders as well as borrowers, and so it's taken up a lot of my time over the last few weeks, as I'm sure it has all of you guys as well.
Awesome. Well, thanks, guys. We want to be really efficient with your time. We know that everybody's really busy and a lot of crazy stuff going on right now. So two quick things that I want to start out with. There's questions and answers. We've had a lot of pre-questions that we'll cover. And so we'll talk about some of those, but please pop up the chat and ask questions, and we'll try to get to those questions as well. The second thing is I've got a quick poll that we'd like to get everybody to answer real quick. The primary idea behind this, if you can, is we're just trying to get a feel for how many people actually received PPP funds and then what bank they use. This is anonymous. We cannot see who actually answered these questions. It'll help us kind of guide the conversation a little bit and understand a little bit about kind of what everybody is, where everybody is and what they said and the banks they use. Just be really helpful for us as we guide that. So while that's going on, I'm going to flip to Adam and with our first question. So we're going to do two questions real quick. The first one is for Adam, and Adam is going to cover the whole tracking and management of this. That's a whole thing in and of itself. Keeping up with the money. Do I put it in a separate bank account? What do I do and all this stuff. So Adam's going to hit that, and then Chris is going to hit just the guidance that came out, the most recent FAQ, kind of an overview from his perspective, and then we're just going to jump into the questions that have already been asked and any questions that get asked in the meantime. So I'm going to turn it over to you, Adam. I think you may share his screen and even show a resource to us. So.
Yeah, absolutely. First, this is going to be frustrating, everybody, and I understand that. I was talking to somebody about, I was telling them we were going to do this webinar, and they're like, oh, you got the answers to these things. And I said, well, it's not necessarily that the answers, we just are in the same boat as everybody else in terms of doing a lot of the research. And so while we might have some non-answers for you today, hopefully that will encourage you just to the fact that while we're spending so much time invested in trying to understand these things and we don't have the answers, the government's just slow in rolling them out. So what we're going to try to do, what I'll try to do as best I can is tell you where I know if I know the answer, like I've read it from the government, this is confirmed, this is good, or I'm just advising you as what we're telling people. So it's not necessarily going to be the official, document that the government's going to take. It's just, this is what we think is the best next step to be able to get us there. So if you've received PPP loan, one thing that we are coaching people on is just document. Don't be flippant with this money. If you can, set up a separate bank account so that you can put the money into that account. And as you have qualified expenses like payroll or rents, you can make the transfers to cover that dollar for dollar. They're not going to, at the end of the day, it's not going to be tagging certain dollar bills that get forgiven or not forgiven. It's going to be more of an audit. But this just helps you have that kind of next step. What we are using, and this actually came from one of the banks, and we just kind of adjusted it a little bit to fit our needs, is we're using an Excel sheet. Here, I'm going to show you this, actually in GDoc today. Paul, can you see that? Oh, that's not the right one. How about that? Can you see that, Paul?
That's it.
Okay. So what we're doing is just using an Excel sheet to be able to track what's happening on a weekly basis with the PPP loans. And this document's going to be available after the webinar today. I think we're going to go to the IT site and you can log in there and request it, and then we'll just send it over to you. Kind of shows what is included, what's not included. That's been pretty exhaustive so far, so I'm not going to cover that today. We're going to talk about how we're doing to track it. And so weekly, as we have different expenses that fit these different needs, we're just filling it out and keeping up with how much value is left in your PPP balance. As you do that, what we're encouraging is take any kind of backup that you can for documentation purposes. Assuming you're going to go through a full audit, even if you probably won't, but make the assumption that you will. So anytime there's a transfer that's made, take a copy of that transfer, save it as a PDF, and put it in a PPP folder. If you have payroll report, download that, save it into the PPP folder. The next step that we're doing is any kind of transaction that runs through your accounting software. We're telling our team, for all of our clients that have received the PPP, is to actually go into the description of the transaction and put PPP before any other information that's in there. What that'll allow you to do is, when this is all said and done, and that includes payroll too. If you have a journal entry that you're posting your payroll to, or if you are, if it automatically connects to a payroll provider via system, you can still go in there and edit that description field for the part of payroll that is forgivable, because not all of payroll is forgivable, only the part that's going to the employees. And again, it's up here documented what you can and can't use it for, but like the employer part of the taxes are not included. And then put the PPP in that description field in your general ledger. And what that'll allow you to do is, when this is all said and done, you'll have the backup that we just discussed, anything that you're transferring to and from, any kind of reports that you can use for backup. And then you can also run a general ledger report and filter off for just these transactions that are PPP. Now, if you happen to have some sort of weird transaction that hit your books that has those 3 letters, you might want to edit that as well. But we feel like the threshold for that's probably pretty low. You are going to be submitting this to your bank. It's our understanding today that the banks are going to be the ones who are participating in identifying if it's going to be forgiven or not. We're hoping guidelines are going to be released soon. And Paul, we talked about, we're going to do another webinar as soon as we have those guidelines out to be able to kind of walk through that. That is kind of the gist.
Yeah, Adam, one quick question that somebody asked that I think applies to your piece right now is, as a 1099 person, I can think of realtors are probably in this category who own their own real estate business, but they have a 1099 portion. How do you document that? How do you do that? What can you do about that?
Right.
And I think there's a lot of not, or I guess they call them gig workers who are that way too, independent contractors and stuff. Right.
Yeah. I would still use this sheet, and I would still do the same methodology that we just described, but all you're going to have is probably like a transfer. If you're 1099 today and you've got commingled books, your personal and your business is kind of mixed in, I would stop that immediately. It's going to be very difficult to be able to figure out where those transfers are happening. So create a second bank account, always have a separate account for your business and personal, and just as you make the transfer out of the account, save that as your backup for documentation.
Got it. Good. Trump,
this document also has things like the FTE review to make sure that if you do have employees, make sure those are on the same page.
Nice.
From the February 15th to the now. So,
Chris, was there anything on that you wanted to add? We talked about the 1099, Adam's tracking. Anything from the legal side, from the attorney side, that you want to add to that piece?
No, I think one of the things that the clarifications on usage that I thought was helpful is a lot of folks on this that are self-employed use their home as their office, and they will pay themselves rent, so to speak. One of the FAQs that came out, or guidance that came out, made it clear that that rent amount can be included as an expense, and so that was kind of a little surprising. That was probably one of the things that I think is probably most relevant in the guidance that's come out so far. As pertains to what you're doing there. And, it's obviously, if it's consistent with, again, I think Adam and I have talked a lot about just, how you determine how much is acceptable. And so with that, there was some clarification in some interim rules that were issued that a couple of elements of clarification I think would be helpful. With respect to any particular employee, or if you're self-employed, you're basically capped at an aggregate amount of $18,385. That and the IRS is this came out in an interim rule that kind of dealt with self-employed and partnerships, and so but it was a little bit surprising. We were thinking that because that you can't get for anything amount any cash consideration over $100,000 a year, prorated for the 8 weeks. We were thinking that would be like 8,333 because that's 12 months divide, 800 divided by 12 and times 2, 833 per month. So that gets more 16,666. Well, it turns as they were clarifying the amount you could borrow, basically they capped it at 15,385 on the self-employed employment guidance. We're telling folks that should probably be your cap on the employees. And then so a couple of kind of guidance has come out since you've probably you've gotten your loan. And so that's something that's kind of that, and the rent pieces were kind of the little bit of guidance they gave us so far. So basically, I think if you're planning on getting, again, this is all about use of loan proceeds for forgiveness purposes, right? So if you, it's all that's the kind of the guidelines that are coming out. We're hopefully, again, they're promising additional guidelines to detail how forgiveness works, which is really challenging for everybody I know because of the fact that you're having to incur these expenses now, use the money now. You've got 8 weeks to do it, and so ultimately, what it comes down to, most of these expenses you're going to incur anyway. And so whatever the guidance comes out, there'll be some opportunities to kind of adjust and et cetera, as long as that guidance comes out before your 8 week begins, which we hope happens.
Sure.
So anyway, a couple of forgiveness items I thought they were helpful. Guidance that on forgiveness that's come out so far is, you've probably heard this, and I'll talk about it again in a minute when we talk about the adequate sources of liquidity FAQ. But the SBA has said they're going to review all loans over $2 million at the time of their request for forgiveness. So, if your loan fits into one of those categories, expect that this documentation becomes particularly important. You're going to have to submit the documentation to your lender regardless of determination. But the lenders are exempted from liability in getting this wrong, basically. And so as long as you provide the information that the SBA is requiring, then the lender is going to let you do it. They're going to let you make the call on a lot of this stuff. And so it's really incumbent upon you to properly document, because you're going to know exactly on a lot of this stuff as well. But there will be an SBA review to the extent it's over $2 million. That's why that guidance that they're supposed to issue is going to be so critical. The other thing that came out with some guidance, this is in the frequently asked question number 40, which, by the way, we will either send you a link to this FAQ from the Treasury. We will send you the FAQ as of but one of the things that came up with is that, as you're aware, if you rehire folks in connection with reestablishing the payroll, trying to prevent the reduction in forgiveness, because ways the amount forgiven can be decreased. One is if you have less employees during this 8 week period than you period prior, and the other is if you pay your folks less than what you paid prior, subject to a 25% threshold. And so one of the things that people are really confused about or questioning was, what if I go to rehire someone to try and establish get full forgiveness purposes, and the employee refuses to come back on the job, or maybe they're kind of fat and happy on unemployment or whatever it might be. And so SBA the Treasury Department issued FAQ 40, which was basically says, for forgiveness purposes, an employee refuses to be rehired, then you're not penalized for purposes of forgiveness. You have to make a good faith effort as the employer to hire them back. You got to give them a written offer for rehire, and then you got to document any refusal. that now, if an employee does refuse to come back, it because of unemployment purposes, then they could be in trouble because essentially, under the terms of employment assistance, they're supposed to be looking for a job and take one if it's offered to them. And so from that perspective, it would endanger them. So I don't know how much of an issue this is going to be, but that was something that has been brought up. I know some people have already accepted other jobs, for instance, if they've been let go, and that you certainly would not be penalized in that scenario. Now I'll touch on now the FAQs set that has been probably the most got the most attention, and that is, a while back, Treasury Department issued FAQ 31, which essentially stated that large borrowers that have adequate sources of liquidity should be on the watch as to in second guess themselves as to whether they should have gotten this loan or not. There's a certification that we all know has to be issued by the borrower in connection with the PPP loan application process. And it essentially states that you're certifying that the current economic uncertainty makes this loan request necessary to support the ongoing obligations of the borrower. And what they basically said was, if you've got an adequate source of liquidity, and they use public companies as an example of this in 31, then they're saying that you shouldn't be able to make that statement that certification accurately. And that was a very scary thing for folks to read, because what does that mean, an adequate source of liquidity? And they referenced, having a large line of credit or access to capital markets, if you're a public entity, as kind of examples. But, what about, the average Joe independent contractor that took out a $5,000 PPP loan that has $5,000 in the bank? And so not to mention everyone in between. So the FAQ made it clear that it kind of hinted about to what is true, and it's stated in the actual CARES Act that there's actual criminal liability if someone later on they determined that certification was wrongfully given, and knowingly and wrongfully given. So they gave kind of a grace period in that FAQ and said you have till May 7th to repay the loan, and if you did, then there wouldn't be any criminal penalties, etc. Okay, which that's jail and fines, by the way, up to as much as $1 million and 5 years in jail. So that scared a lot of folks. First off, people started saying, "Oh, that's just public." Some people came out. They said, "Well, it's just large public companies. That wouldn't apply to just the average person." And they came out and made it very clear in FAQ 34 that it does apply to private companies, large private companies. But again, large is kind of the issue. Again, we're still kind of thinking, how will this work? Whatever. So then FAQ 36 comes out. Again, they're getting more and more criticism. So more and more FAQs come out. So as the mounting criticism as to how the PPP loan has been administered, more and more FAQs are coming out. So FAQ 36 comes out, and SBA says that, based upon the comments that the Treasury Secretary had said the prior day, we're going to review all loans, PPP loans, that have an amount in excess of $2 million, and any other loans as that are appropriate. Okay, and in that, and it says that at the time of forgiveness, they'll review these. Which, I mean, we all kind of thought maybe that could happen at some point, perhaps. That's why we're working so hard on the documentation and that Adam was talking about. But the thing they made clear was they hearkened back to FAQ 31 again and said that made it clear that part of what they'll be looking at is whether you could accurately say that certification was true, that because of current economic uncertainty, this loan request is necessary. Which again, so now you're like, well, even then you're kind of like, well, how are they going to? I mean, how are you going to say that? How can the SBA tell us one way or another whether that's true? Well, that became the question, and in my mind, even I was thinking this is a scare tactic to prevent people from getting new loans, because at about this time the new CARES Act amendment came out and appropriated another $310 million $1 billion for this purpose. And so, so from that perspective, they came out with another FAQ earlier this week, and extended the period by which you have to repay the loan to May 14th, and then promised additional guidance on how the SBA will determine whether your certification was properly made or not, which, that last one I think definitely got some people's attention. And so the promise of additional guidance that to basically tell us, the criteria the SBA is going to utilize in their review, it sounds very much like they're working on some criteria. And again, I personally think this is a very unfair thing. I don't know what criteria they're going to be able to come up with. It's going to make anybody feel as though there's less economic uncertainty. I mean, I don't know how in the world. I mean, I don't care what your bank account is.
Yeah.
How are you? I mean, like like even like some of the questions we got, one of them was, hey, well, we're doing okay right now, but we're really worried about 2 to 3 months from now, because when all the stuff we're doing right now is typically paid by insurance companies. We're a medical company, and that's the whole issue, right? We have no idea what the future holds. And so I think pretty much everyone can say there's economic uncertainty that makes this loan necessary, unless you literally just have tons and tons of cash set aside. But what about the business? It's got, $500,000 in the bank and our cash on hand, and then a line of credit of maybe $250,000. That's about 2 months worth of expenses for their payroll costs and those other allowable expenses. So how do they know they're going to have that money 2 months from now? So it's a really just a, I mean, it's a gotcha kind of scenario and a bait and switch scenario, in my opinion. So I have no idea what that's going to turn out to be, but it's one of the more, critical questions that we're waiting on right now. And it will probably have a significant impact on whether a lot of people try and pay their loans back on May 14th. It's a good way to get
Chris,
money
you were
back
saying
in the
earlier,
coffer.
you were saying earlier that could be a real quick turnaround, right? Like we need to be watching out for that to be something that's.
That guidance could come at any time. If it's anything like the other guidance they've given us, it'll probably happen on May 13th at 11:59 p.m. And then we'll all be spending the 14th trying to figure out a way to repay. And so as of right now, I hope that they're working very hard on that and they'll get that to us quick enough to where you can actually look at the criteria and determine whether or not. But even, I don't know what criteria this is going to be. It's going to be very, very interesting. Couple other just, FA guidance that's come out that I think has been interesting. Well, there really is just one more I want to mention, and that is FAQ 38. I thought this was pretty helpful because it's a really small subset of people this applies to, but not as few as you think, and it could be a real critical issue. But if your company existed on February 15th, 2020, or a company existed on February 15, 2020, and then was sold subsequent, okay, the purchaser can apply based on the data and the payroll, et cetera, of the predecessor. So that's one little just tidbit that I thought was kind of helpful. Most of the FAQs that have been issued about how you determine the amount of loan and that kind of stuff, they're all on the SBA website and look at them. But my thought is most folks have got their proceeds right now. And there's really very few lenders I'm aware of now that are continuing to lend. And I think there's two reasons for that. One is just availability of capital. They only have so much capital within their bank to lend out this way. And unless they sell the loans on the secondary market, they're not going to be able to replenish that capital. They are allowed to do so, but thus far, I haven't heard of big swaths being sold. And I think the other reason why is because at this point, this liquidity issue has kind of gummed up the process quite a bit. So a lot of folks that have kind of pulled off. And so as a result, there's just, and of course, and some of the other things that have happened is that the SBA has really tried to put a governor on on access to the system and how quickly you can input loans and who can input loans. They set aside a certain amount for smaller institutions, financial institutions to be able to lend. So anyway, that's basically the update. I think that's since you've gotten your loan, that's probably the stuff that's most important.
Cool. Awesome. You guys kind of highlighted the questions that got submitted before, so I want to cover those first. And there's been a lot of questions on the Q&A while we've been going. So if you guys want to just grab those questions that you guys already highlighted and just kind of try to tick through them. It's 12:25, so maybe go for 15 minutes on those, and then we can try to pick up the questions that people have asked during this session so far.
Sounds good. First one's mine. Let's see here. Someone asked, I'd like to know what the time period is for payroll costs to be forgiven. Is it from the time of the loan application, or when we actually receive the money in the bank account? And it's actually when you received the money in the bank account. From that date forward, you have 8 weeks. This question comes up a lot, so I'm gonna go ahead and answer it as kind of like a question B with this. We are gonna right now we're making the assumption that it's gonna be cash basis for their method for identifying which payroll costs are included. So, if you have employees that worked last week and you're paying them this Friday, but this Friday is inside that 8-week period, that's gonna be what's gonna be forgiven. Now with that, unless you've got some abnormal payroll runs, if you're paying people every week or every 2 weeks, you should have the same amount of payroll periods in that 8-week period. And so it shouldn't matter too much if you're trying to squeeze one in the front end or squeeze one in the back end. And you could probably, if you're paying people for 2 weeks and you wanted to pay them that last week and you could try to squeeze that in, that's probably okay. We're advising our clients. So we've got a lot of bookkeepers working for us. There might be lots of different messages that are being sent, but one of the things that we're saying is just try not to do anything too risky here. Just stay right above board, just because we don't know what these guidelines look like. And that's probably not gonna be enough money to move the needle for you. And so where you can, just stay on your normal payroll runs and it'll be cash basis for that. Chris, I think the next question is yours.
Sure. One quick question on that. What about with respect to, payroll costs that maybe have accrued in, like maybe there's back pay that you owe employees, or perhaps while they were unemployed, maybe laid them off for a while. Can you make up any of that pay that you missed paying your employees during it from your perspective? What do you advise?
Again, please everyone know this is just my perspective. We don't have any guidelines on this, but again, because of the way that they calculated the loan on the front end using the 940, we're still again saying cash. So if you are doing some pay and you're catching them up on this, this paycheck run this Friday, it's came out of your bank account in that time, and that's the best guideline we have today. Again, not official yet, but that seems to be a logical way for them to be able to tie this back out.
Yeah, I would have a lot less problem with that than trying to accelerate pay. And
right.
I think that it's going to be pretty clear that you're not going to be able to take pay that you would owe them for July and pay it to them in June.
Right, I would not do that.
I know a lot of folks are talking a lot about maybe bonusing their employees and things like that. I personally am trying to discourage those things, and basically just say, if you want to play it safe, where I know you'll right the sweet spot will be is the pay that you typically would pay them for a similar 8-week period is kind of what you would do. So,
I agree completely with that. I'm seeing a lot of questions in the chat about that as well. And one question was about a raise. If that was a raise that was coming anyways, just business as usual. Like, just don't try to fund anything up. If it was a planned raise going into this thing, May 1st, somebody was going to get a bump. That's probably fine. I would do that. If you go in and give everybody a raise, and then they come in and look at it, and you do have an audit, I just don't think it's worth the risk again.
One of the questions is, what are the rules for the $10,000 EIDL advance? And in terms of, is it a grant? Is it a loan? Is it subject to interest? And the answer is, so to answer that, you really have to kind of understand there's a separate loan, emergency assistance loan program called the Economic Assistance Disaster Loans and Economic Injury Disaster Loan Program. That's what EIDL stands for. And so in that program, it provides for, and in the CARES Act also discussed this as well, it provides for when you apply, you check a box and say, I also would like to apply for the kind of emergency $10,000 advance. And it's not exactly 10,000, it's based on the number of employees you have. But anyway, if you qualify and you get that money, then is considered in a pre-advance, like a pre-approval advance of the EIDL loan. If you actually get the EIDL loan, it'll just be included in those proceeds that you would otherwise be borrowing. If you do not get the IDL loan, which is for most folks because it's just underfunded. If you don't get that loan, then it's the CARES Act makes it very clear that does not have to be repaid. It's considered a grant.
Yeah. Now with the PP, if you get that 10,000 and the PPP, it will not be included in the forgivable part. So they'll take the $10,000 back out of that total PPP amount. Is that right, Chris?
That's correct.
That's what you understand it.
That's correct.
And the forgiveness is not all or nothing. And this was a question later on as well. It kind of goes into what we're talking about right now. It's based on the usage. So, it could be that you have a situation where, you have a $100,000 loan from PPP and only $70,000 of that gets qualified. Well, that 70,000 is what you'll be applying to get forgiven. It's not like you have to use it. It's not Brewster's Millions where if you don't spend it, you lose it. So, sorry, 80s reference movie.
Chris, you want to take the rest of that? There's a pretty big section of question there that I think maybe can get wrapped into one answer.
Yeah, I think I covered most of it. So, in terms of the question, there's a series of questions that deal with the adequate source of liquidity issue, and really what it comes down to right now is, what we know is what I told you. Everything else, like a lot of questions, people are trying to figure out, how do we document the need? Well, we don't know the criteria yet they're going to use to establish when someone does have a need or does not. And so, so right now, I really don't have much to tell you. I would say this: if you're got a loan that's under $2 million, I would say there's a pretty low likelihood that this ever gets really looked at. And so, but once we see the criteria, we'll have a better feel for what that is. Again, I have no idea what it's going to be. It's going to be very interesting to see what it is. And I think that the Treasury Department, if they really do try and kind of create this category, that basically create this set of criteria that a significant percentage of PPP loan recipients will fall into, I think they're looking for litigation, because I don't know that this rule making process would be considered a fair methodology.
Chris, can you or Adam restate what you said about the EIDL advance answer as it relates to the PPP?
Yeah, it's kind of confusing. Do you want to take a shot at it?
You go ahead.
Okay. So if you get that $10,000 advance and then you apply for the PPP and you get the PPP money, what's basically going to happen is they're going to say, even if you use all the PPP money appropriately and for the right purposes, $10,000 of that PPP will not be forgiven. And so, yes, technically that $10,000 is still kind of a grant that comes to you. You have to pay that back, but the total PPP amount that you can apply to get forgiven will be subtracted by that $10,000. So if you keep that $10,000, it's 2 years at 1% or something, or you can just pay it back via the PPP program, not via the EIDL.
Yeah, I think that begs a question, just like what do you do whenever it turns out you aren't able to qualify for the forgiveness, or you think you're not going to be able to, again, the key is don't take the money out of the special account until you can use it, and then it's always there, and you don't have to worry about it. It's repayable over 2 years, and so now if you use it for purposes that are not allowable, okay, that's a different thing. If that happens, you better be paying that back pretty quick, because that would be considered because that is using it for purposes allowable is subject to additional penalties.
Hey, one little nuance. There was a question in regard to the HHS stimulus, and I know there's quite a few healthcare providers, customers on here. Do you know much about that, Chris? I
don't. I'm sorry. It's certainly it's just outside my purview. So yeah, I wasn't even familiar with there being any, to be honest with you. Okay, next question on here was, when calculating forgiveness, how does overtime and or bonus pay feed into the amounts to reach 75%? Again, I think we kind of answered that earlier. Overtime, I think I wouldn't have any problems paying someone, even if they're not working overtime. Maybe they're not, because the whole purpose of this is to pay people that aren't working. So if traditionally you've paid overtime, I think you can make a strong argument. It's not, again, anything other than just what they would definitely be entitled to for a typical 8-week period, because overtime is not guaranteed, it's depending on the amount of work. I think you're risking it, but I think that's a pretty low risk item for me if you're paying in a way that's consistent with, past pay. And bonus pay, I think, again, again, if it was commissions they typically would earn, I think that's something you could do, but just to bonus them to get your 75%, I wouldn't recommend doing that until you hear additional guidance. And then Adam, I think we covered this one here. When calculating headcount, how do you count part-time employees, both in terms of the application benchmark and also in terms of, the forgiveness number?
Yeah, what we're assuming is, again, it's the government, so it could change, but it's just the hours divided by, or total hours divided by 40. So it's a full-time equivalent. It's not a body count. So, and that number has, I think they've used 35 or 40 in the past, but it's going to be somewhere around in there. If you're doing math, I'd do it on 40. Just try to get to be as conservative as you can for that head count.
And that full-time equivalent concept only comes into play in forgiveness. When you're just doing a head count for whether you're under the 500, then you have to just do a straight head count, and it doesn't matter how many hours they work. Part-time is included.
And somebody asked the question, are contractors included in the ability to pay to use that could be forgiven, and contractors are not included. Contractors can't apply for their own PPP loans, and so they are kind of set aside. They're trying to make sure they don't get double dip.
Okay. Another question is, how soon do we have to start rehiring all our employees? We understand that all must be back by June 30th. Before that time, are we allowed to have partial staffing? And so the answer to this is kind of tricky, because to a large degree it's mandated by the need to utilize the proceeds for payroll, 75% of the proceeds for payroll costs. So most people are going to have to rehire their employees in order to hit that 75% mark, because it's based upon 2 months worth of average payroll, right? So if that's the case, then generally speaking, you're going to have to rehire your folks to pay them. That said, if you're able to hit that 75% mark, otherwise, you don't get a reduction in the amount forgiven as long as you rehire them before June 30th. And so, but again, I'm telling folks it makes more sense to rehire folks, prior to receiving the loan proceeds, so you have folks to be able to absorb those payroll costs.
Right. Which is where it's going to get tricky on this whole forgiveness thing, right? Because it's going to make it to where, that the program is, that's encouraging you to hire back as fast as you can. So get the team back on, get people back to work, even if you don't have anything for them to do. If they come back later and say, hey, we're not going to forgive it after all, for whatever reason, people are making business decisions based on this stuff being forgiven. And so you also have to evaluate it from just your business and knowing your business. And is the right time to bring people back? If you can't, or you don't have the ability to, you can't open, be careful. I think Chris is right. That is the best way to use the funds correctly, but be careful that if these guidelines come out next week, it could adjust some of that. Meaning, if you don't think you're going to get it forgiven.
Right. I think we covered the next two.
I think we did
Adam.
too.
Yeah, and so
Paul, do you want to jump to the webinar, the questions in the Q&A?
Yeah, why don't you pick up a couple for us, Paul? You're muted, Paul.
Hey there. So one of them was about utility payments as it relates to forgiveness. So the question was about phone bills, but I think it's just good to cover the whole thing. Like, what is a utility payment? We've had customers ask us, hey, is my bill to Amazon, is that a utility payment? So I'd love to hear what you guys have to say about that.
Well, Chris, you want to take that one? I
can read the definition. So there's in the CARES Act, it actually provides for a definition, and it's in section 1106. Let me just get to it real quick. 1106 section A, and I think it's number 5, subsection number 5, and it states covered utility payments is the definition, and it reads payment for a service for the distribution of electricity, gas, water, transportation, which, by the way, they have said gasoline for vehicles can be considered a covered utility payment in this regard. Telephone, or internet access for which service began before February 15th, 2020, which I don't know how that works on gas. So I personally, I've just been saying, it's your Comcast bill. It's, it's your, I would not be looking at Amazon Prime and those things. It's basically whoever supplies the trunk into your, we have been saying cell phones though. We've been giving folks the go ahead on those, because I think that would qualify as telephone. Again, as long as service was in place, before or as of February 15th, 2020.
A couple of people have asked about, hey, I got it. Like I've been approved. I don't know if I want to take it because it's changing so much. I guess maybe there's more of a comment, but I don't know if that question is, what do you think?
Yeah.
Like that might be the question is, so should I take it? I know it depends, but it'd be,
I'm advising if your business is operating normally, you don't feel an economic impact. I think you probably should give it back. It just depends on now, like thriving, and everybody, the three of us could have three different opinions on this. So this is like totally an opinion piece and what your gut's going to tell you, because there's no government guidelines yet. Again, we hope there will be this weekend or next week. And that'll be clearer for us. But if your business is up, you haven't been impacted and you still got this money, like it's risky.
Yeah. So one of the questions was, I think in relation to what you said, Chris, in paying yourself rent for a home office. The question that says, is it a percentage of the mortgage or all of it if you're in a home office? But I think the way I understood it was, if you were paying yourself rent for a portion of it, that was what you can use, not just your mortgage, or you have to have had some history of doing this already.
Yeah, I would look at what you did in 2019 as the example. If you have rent expense on your on your Schedule C, then that's what you're going to be looking at. I would take that and divide it by 52 and then multiply it by 2, and that's where you get to it. So if you have not been doing that in the past, I would not start doing it now.
Okay.
Yeah.
As a 1099, can you use 100% of the money toward payroll? The PPP loan does not exceed what I would normally make in 2 months, or is it truly still a 75? You can.
Yeah, even in normal businesses as well. It's 75%. It's kind of like people see the 75%. That's actually just the opposite of the 25, right? So the 25 is the cap. You can only spend 25 on non-payroll related expenses. But if you're able to spend 90% on payroll, that's fine. It's okay.
Yeah. One of the questions says, since the money is refundable, what are the ramifications of the use of the money that's from the PPP loan funding that gets replaced with revenue? I guess that's a question in regard to if you don't need it, or it gets replaced.
Yeah, I think what ultimately comes down to is you just want to document that the use of that particular funds was for this payment. The fact that you have additional revenue coming in does not prevent you from doing so.
One person says, in the loan, we got our loan yesterday, so which pay periods will this cover? Is it retroactive back, or is it just from that time forward?
Yeah, I hit on that just a little bit. What we're advising people is we believe this is going to be cash basis, so just do it based on when your payroll runs. I wouldn't start getting tricky with those, or mess with them. Just whenever your payroll's running, if it's inside that 8-week period, again, 8-week period defined as the day the money goes in your bank account. If your money goes in the bank account, say on a Thursday, and your payroll's on Friday, well, that one could be included because it came out of your bank account on that Friday, even though technically it's an accrual payroll, most likely for the hours worked either the previous week or even earlier that week. But on the back side of the loan, on the end of that 8-week period, you might have the same problem again, where you've got 2 weeks worth of payroll and it's on the Friday after the 8-week period. Well, you should have the exact same amount of payrolls in that time period. If you've got something funny there with how your payroll runs, then let's consult that on a case-by-case basis.
Another one I think we already answered is, we have no qualifying other expenses. So to get 100% forgiveness, basically you got to spend 100% of it. Correct?
It's only, you can spend 10% of it and get 10% of it forgiven.
Right, but to get 100% forgiven, you obviously.
Oh yes, to get 100% forgiven, you've got to have. It's not all or nothing.
since payroll compensation was based on the last 12 months, if you don't give bonuses, it will make it look like a decrease in payroll. So I guess the question is, if you may have given bonuses in that 12-month period, but now you're not, so it's going to look less. So how do you handle that?
That's a good question. And we just don't know the answer. I mean, I think I can make a strong argument for, basically 250 seconds of the bonus you would, or I guess it should be 450 seconds, 850 seconds, 850 seconds of the bonus that you would give at the end of the year, for instance. The big thing is you got a cap of 15,385 is how I would look at it. But I could certainly make an argument that like a pro rata portion of that bonus has been earned.
Right.
Got it. Okay. The question about the EIDL loan, if you have a PPP and you have more than 500 employees, does that matter? The question is basically, if you have more than 500 employees, can you get an EIDL loan even if you already have the PPP? Can you do both, I guess?
You can't do both. You can't apply for both. I think the PPP or the EIDL has to be paid back, but it goes one way or the other. I can't remember, Chris. Do you know which way?
Yeah. So you have to look at them as two separate programs. Okay. So number one is if you have a PPP loan and you subsequently get an EIDL loan, then I would just highly discourage you from using it towards the same payroll costs. Now, later on in the future, after you've already been forgiven, the 8-week period's done. Yeah. Okay. It's fine. I think it's probably fine. But I would, make sure that you don't use it for the 8-week periods of payroll and other eligible payroll in particular. If you already have an EIDL loan and you get a PPP loan, you're basically forced to refinance that through the PPP loan program.
Right.
And so it gets added to what you would otherwise be able to borrow, because that's not your issue if you already got a PPP loan. Chances are you're probably not going to get an EIDL loan. If you
don't have it now, you probably aren't getting it.
Yeah. Okay. This question's been asked a couple of times in different ways about making your 401k safe harbor payments within the 8-week period to be included as employee benefits, even though you would normally do that later in the year, September, whatever. Can you do that? Can you push them ahead? Can you do the kind of 850 seconds idea, Trump, or how do you handle that?
I think you probably could. I would. I don't think I'd have any problems with that. Again, anything you do that's outside of that, just like what you typically would do for an 8-week period, is going to be subject to potential some risk until we get guidance. And so, but from my perspective, it seems. I mean, again, the whole point of this is it's going to your employees, right? This money goes to your employees. And I'll just say this as kind of a little bit of, and you probably know this already, but Europe has not seen the same type of unemployment that the U.S. has, and that's because their system basically works like the PPP loan program. Their system over there is that the pay gets paid by the government and through the employer. They basically cover the employer's payroll. Here, the employer has to let them go. They then file unemployment and get it personally, individually, instead of through the pay. And they do have another unemployment kind of scheme as well, but this is what they do instead. And so here, that's the whole point of this here is they're trying to make sure that if you look at like what Europe's doing and kind of gives you an example, they're just trying to make sure that people get paid and don't have to be let go to get paid.
Right. And I also look for material, like, is it material? Like, just as you make it more complicated to have your backup, your documentation, or your to these little minor adjustments, for some of us it is material, but if it's not, I think it's just going to be tricky. So hopefully the guidance will give us more clarity on that.
We've got about 10 minutes. So I just want to I've put this in the chat, but whatever questions we don't answer, I've scraped them all out. We'll get all the questions answered and put them in our blog post so that everybody has them, as well as the tools and resources. But I want to get through these. One of them says, how are the items accounted for? Equity, sales, a loan? How does this fit into the financial accounting aspect?
Well, one of the nice things, and Adam can talk to this probably more, but the forgiven part is excluded from your income. So typically, if debt is forgiven, so it's a loan, but if debt is forgiven, typically it would result in income to your bottom line. Well, they're saying that is not the case for this loan. It does not increase your income for tax purposes.
But then they came back, I thought last week, and said that the expenses that you use are not deductible. So I mean, I think they're going to get it.
You know, I'm curious what your take on that is, because I've heard two different two different avenues on the commentation on that, and one is, and as I read it, it sounded a little bit more like saying you can't that you're not going to be able to that it basically has to be consistent with 2019, not saying that that necessarily that you couldn't deduct them this year. So I don't know. From my perspective, I was a little confused by that.
Okay, so, well, again, you're reading this stuff probably better than I am as a lawyer. So
I'll look and find that one and see if I can answer that. Go ahead.
Seasonal businesses that peak in the spring have to maintain the same level of employees at June 30th. It's a question. Do seasonal businesses that peak in the spring? So I'd imagine if you're in Sevierville, Pigeon Forge, where your payroll goes up a lot in the middle of the summer. Can you assume the full amount of payroll will be covered with less employees, or how would you handle that?
There's some guidance on that actually. Let me see what it is real quick. Hold on. It is. Hold on. Okay, can a seasonal employer they elect to use a 12-week period? Let's see, is this on the amount it's calculating the loan amount? Are they talking about calculation of the loan amount, or are they talking about more of the forgiveness part?
I don't know. I'm actually not sure. It just says.
Whoever asked that question, throw that information back in there. I do know that there is some ability to use that different time period, because the CARES Act talked about instead of using here it is. The only guidance is about the maximum loan amount. So the if you look at the CARES Act itself, the way it defined like the comparative periods, if you're trying to determine for forgiveness, you look at the CARES Act, and it looks at if you're looking at your employees as during the 8-week period and compare it to, and you can have a choice of February 15th to June 30th of last year versus what the other option is January 1, 2020 to February 29, 2020. And so when you're trying to figure out the reduction of forgiveness and you're looking at how many employees you had during the 8-week period and compare that to how many employees you had in some pre-loan period, if you're a seasonal employer, you can use the February 15th, 2019 to June 30th, 2019 period.
So it's one of the questions is, if there are funds left over after you pay all your legitimate expenses, do we give that balance back in a certain time frame? Does it become a 2-year loan? Like, and we can use it for other purposes. What happens? I use 80% of it. I got 100. I use 80,000. There's 20,000 left. What happens?
You have a 6-month period till you have to start making payments on that, but that 20,000 would be converted into a loan. And so, inside that 6-month period, if you paid it back, you're not going to have any. As I understand, you won't have any interest. The interest and payments will kick in at that 6-month period, but it's only a 2-year note. So it's going to be, depending on how much money that is, it could be substantial. Be doing some math on that to see if your business can fund that note.
Does the whatever's left have to be used in the same way, or can it be used for anything at that point?
No, once it gets converted into a loan, it's my understanding it can be used for anything.
Okay. After the 8-week period is over, are we free to, that's the same question. Are we free to use the money however we want? Can normal guarantee payments to a partner be included as part of payroll obviously if they're under 100 grand for the under 100 grand piece?
Chris, you want to tackle that one?
I'm sorry, I was trying to find that information on the deductibility, but go ahead, say that again.
Okay, no, I got it. It's my understanding as long as you stay underneath that cap. Chris, what was the total amount that
15,385.
Right. So you can do up to that much, but yes.
Okay, good. Got about 5 minutes to go. Our FTEs are calculated based on total hours, or the number of heads. It's total hours divided by, right? That's not the actual heads. Yeah, we talked about
right.
Full-time equivalent.
We already talked about you just mentioned the 100K gross and how we would calculate that. So we answered that one. If I'm self-employed, a sole proprietor attorney with no employees, and already had a separate business bank account that I write a monthly check for bills every month and deposit into my personal account in my wife's name. This is a long one. I'm not sure if I can capture this one or not. Let's go back to this one. We'll put this one online. This one's a big one. What are thoughts on hazard pay as a bonus incentive for essential employees? Would this be considered okay to be forgiven if this was something the company would do even without the PPP?
Chris, you want to take that one? I'm not sure I followed.
I would.
Yeah, hazard pay would be, if I do a specific job that's very risky and I get hazard pay, is that okay to add as a bonus incentive for essential employees?
I think that would be actually, I mean, vacation pay is considered, so I think that would be actually, be fine. That would be I feel like I've seen something that too. We'll have to look at that a little more clear, but that would be something I would have no problems with. And I would bet you that is going to be covered by the guidance that comes out, because that's a very hot topic, in terms of like, you're trying to keep your employees to continue to come. And many, like Amazon is talking about paying additional amounts to their employees right now. And so, I mean, it's that whole concept of like really trying to honor the folks who are doing the essential services is pretty critical. I would have a hard time seeing the SBA say that's not allowable.
Right. And as long as there's a good justification for it. Again, when I was saying earlier that, be careful doing bonuses or raises right now. If you have to give everybody a raise to get them to come to work, I mean, I guess it's not necessarily hazard pay if they're going to an office, but they're just anxious or, whatever else it may be, that's justification. So, I mean, as long as you've got good reason for it, not just, well, I was trying to fill up the PPP, as much PPP as I could. That if that's your answer, then I'd probably check it. But if there's other things that are causing you to have to conduct business in a different way, like, by all means, that's a market.
Couple more. I took a second mortgage out on my home 2 years ago for the cash to put in the business to grow to what my current payroll is. Is that a qualifying mortgage interest? Does that qualify? So I borrowed off my house. I put it in the business to be able to cash flow, hiring employees to get to where I'm at today. Can I use that mortgage?
Probably depends on if you booked that as a loan into the business or a capital contribution, I guess, Chris, would you say?
Is this a self-employed individual?
Or didn't say in the question.
If it is, and it's an sole proprietor scenario, I think you might have a good argument there. If it's not, then the fact that it's not secure, unless it's secured by the assets of the business, I think I'd have a hard time arguing.
Okay. Can the money that is included in the 75% payroll funding be paid in an employee loyalty bonus?
Yeah, again, I think that we've answered that question. I think it probably falls into the same guys, just like be careful doing something you don't normally do.
Yeah. If you're a nonprofit, can the forgivable part of the PPP be counted as a grant? I think that's what it is essentially, right?
Yeah, I'm sure there's going to be a new line item on the tax return this year that our CPAs will be adjusting. I'm not sure what they're going to call it. I haven't heard that yet.
Okay. Leases on games for a family entertainment center, are these included in the forgivable portion if the leases were in place prior to the February 15th?
Leases on games?
Yeah, I guess leases on assets. Center, just assume it's a, yeah.
You leased you bought whatever 100 pinball machines, whatever it is.
Yeah.
And you're paying on a lease.
Yeah, I think, let's see here. Hold on. I might be able to find that one. I think lease payments, I mean, if you look at just the language of the statute, it doesn't look like it's included. Okay. And so, but it's a question because, like mortgage interest. I've been telling folks that I wouldn't include that mortgage interest. You can make an argument that it's interest on mortgage if it's considered a financing lease. Like, in other words, you have to book it as a mortgage anyway on your. But again, I think that's kind of being a little bit stretching that a little bit, and I would probably discourage that unless you get guidance that says something to the fact that you could.
We are out of time. This was great. Just FYI, we are going to, again, answer any questions we didn't answer on our blog post, links to the different tools and stuff that Chris talked about, and Adam's tool and the PDFs that Chris used and some of the guidance that's from the SBA. We're going to try to do a follow-up at 3 o'clock on the 13th. And if, depending on when the guidance comes out, and if not, it'll be at 9 a.m. on the 14th. So we will get that queued up as soon as we know something.
And that is the guidance on the adequate source of liquidity.
Right.
Right.
Yeah. So,
Right.
so that because the 14th is the day you had to repay, our hope is that we can have we'll get the guidance, but well in advance of that, and be able to have a call, a Zoom meeting webinar on the 13th. And if not, then hopefully we'll at least get it by 11:59 on the 13th.
Yeah. Well, thanks to everyone. I appreciate it. This was super informative.
Thanks, Paul.
I know even
Thanks,
for
Chris.
me. And yeah, thanks for being on. A lot of people are saying thank you. So watch for another invite for the one coming up at 3 p.m. on Thursday, or excuse me, on Wednesday.